What is going on, guys? Good afternoon. It's your favorite mortgage lender, Abdel Kawatmi, Got Mortgages. Happy Veterans Day. Shout out to all of our veterans. Thank you for everything that you guys do in supporting and maintaining the freedom in our country. We're going to dive right into it, man. We've got so much to talk about. Obviously, there has finally been an end to the elections. A lot of people were holding off for really quite some time to see what point were we going to finally put an end to this in regards to whether we were going blue or red. Obviously, the latter happened. A lot of different impact within the market. We're going to dive deep to kind of see how the market has transitioned since then. But in addition, we also saw, staying on the topic of housing, we saw that the Federal Reserve went ahead and cut 25 basis points. I shared a video yesterday, really just covering a little bit more in detail as to what the expectation was when they went and cut and how that was necessarily going to impact the housing market. So they have gone again and cut their federal funds rate once again after they cut it already from 50 basis points. So we've seen a cut of 75 basis points in basically just under 3 months. The new federal funds rate has dropped to between 4.5 to 4.75. Again, this happened unanimously, which is great. Now is going to be the true bottom line scene, where what is going to be the dual mandate that they're looking at with price stability and maximum employment. We know it's always been about inflation and it's been about employment, and that's still been the case. And then we saw, of course, the PCE report also came out showing only a 2.7% uptick. Once again, knowing that in the last 6 months of readings, core PCE dropped to 2.32, really kind of monitoring exactly what we were looking to truly hit. Then we saw, again, some updates in regards to just home prices. Home prices continuously going to jump up year over year. We're at 3.4% from where it was last year, showing the resiliency and really just the high appreciation trends that are still occurring. And then 2.9% when it comes to Black Knight or ICE. Once again, we'll usually see around this time a little bit of a slowdown, although the market is anything but typical. But fall time usually shows a little bit of less competition. Depending really on your location, local markets are very different in very specific areas. I mean, some offers, guys, we're putting and they're getting accepted quickly. Some offers we're still competing with your 13, 14, 15 plus offers continuously as we're starting to gear up, with the busy season. Continuing jobless claims has hit a 3-month high. That is important, or I should say 3-year high. That is important for us to look at. Again, almost 1.9 million people who have lost their employment and just really have a hard time thereafter really regaining and finding employment. And then the importance, again, for this week, we're going to get updates on both CPI report and PPI, consumer price index and producer price index. Kind of looking at the market. Again, really today is obviously Veterans Day, so we won't see too much data when it comes to that. But if we kind of see where we're at since July 1st, 2024, if you guys can see here, since the Fed cut the 17th, rates jumped up. Then now, ever since the last week, we have been on a pretty quick downward trend, which is great, truly showing, again, the cut down and the resilience of the market as we're starting to slow down. We'll take a look also at mortgage-backed securities. Mortgage-backed securities, again, this is an inverse reaction. As mortgage bonds tend to go down, rates go up. Now that we're kind of seeing a little bit of green, that usually means that interest rates are going to also simultaneously start to go down. This was an interesting article I was actually reading today talking about how President Trump's presidency can impact the housing market. The first thing that they mentioned was deregulation, a lot of different eliminating regulatory barriers to make housing more affordable. One of the key points that President Trump mentioned at his meeting on September 5th, they'll eliminate regulations that drive up housing costs with the goal of cutting the cost of home in half, 24% of the cost of a single-family home and almost 41% for multi. We also know, obviously, the positive impact when it comes to employment. So construction workforce, we know there's a huge surge from the prior administration when it came to just illegal immigration. That's going to obviously change now with a lot of different potential deportations starting to come into effect. But we're seeing, again, tighter border patrol. About 31% of construction workers are actually immigrants. Pretty interesting, which kind of makes sense when we take a look at, obviously, the cost of hiring a immigrant when it comes to construction various than obviously a union employee. And it's really impossible to say, but you'll kind of see, again, only 3% of those who are actually looking for construction trades were actually one that were looking to do it that were not immigrants. Then this is a scary part that we really want to see is going to be the tariffs. So tariffs again uh, could hike that building costs. We do know now, I shared this earlier also in a video where we know that there's some potential talks already internationally with the tariffs kind of being put on pause, and obviously everyone jumping on that. Blanket tariff of 10 to 20% on raw material, obviously, would skyrocket the cost of housing. We know, in my opinion, that's probably not necessarily going to be the case. I think we'll start seeing a lot of different international powers start to change their stance and really be more open to communications. And then we saw again, home builders expect to construct 1.2 million new single family homes. Again, we have just such a tightness of supply and demand. It's been like that for quite some time. And we really want to make sure we stay on top of that stuff, truly just looking to keep up with that pace that we really need to, and truly impact, right, and prioritize, housing costs just as much as what it was in the prior thing. Okay. So of course, I'll keep you guys updated as always, kind of taking a look at, once again, hopefully we can continue on a little bit of this significant quick downward trend, kind of like what we saw around July, really kind of trend. And that's really, if we'll kind of look back, even at the beginning of the year, kind of that trend of where we've been, anytime we've seen a pretty dramatic hike with rates, where we kind of saw really within the last month and a half, we've seen a pretty significant downward trend since. So hopefully we are on that significant downward trend. As always, I'll keep you guys updated. Any questions that you guys have, of course, make sure you visit our website, gotmortgages.com, and I'll catch you guys next week. Have a good one.